Silver, I still think, a lot of games being played. It's one of the favorite hangouts in the world for game players. I can't think barely of another market except for something like light aromatics in the petroleum game where things like this happen. But that's silver for you. Like I said, if you go on a date with a psychotic girl, you never know what's going to happen.
Monaco 64, home of alternative economics and contrarian views. So it's Thursday, February 5th, 2026. And yeah, it's around 8:20 a.m. London time. And I've got Peter Carlin back on. He wanted to talk about the market action in gold and silver. And it's certainly not boring, right, Peter?
Not at all. Quite the overnight out of the East. We've come well off the highs from silver now in two big segments down, looking for the bottom, and now we've got a 7 handle on this, and I would say that we've cleared out both sides of the arena. We've cleared out the weak length who chased on the way up, and we've also seen a lot of the people who were shorting all the way up, got probably stopped out at the top. So silver, I still think, a lot of games being played. It's one of the favorite hangouts in the world for game players. I can't think barely of another market except for something like light aromatics in the petroleum game where things like this happen. But that's silver for you. Like I said, if you go on a date with a psychotic girl, you never know what's going to happen. Of course, the real point too is if you look at gold, nothing really happened.
No.
Gold has just been steady and right in there, off maybe 1.8%. But if we go to that second chart system that I sent you, that's going back to when we talked a week ago, when we started to move down, when we had the first big move down.
Is that the one with the touchdown that you wrote?
Touchdown, yeah.
Let me bring it up.
And
this one?
Yeah, that's a week old now. You can see where we were. We were at 51.77 on that chart. And I was looking for 5,000 if it broke for the market to touch down on 4,500 and then stabilize or reverse and stabilize. And we got almost exactly there. We came a little bit through, but we did not get a close. Important to remember, we only went intraday below 4,500. So please remember that's chart that you're looking at is a week old, but the indication of the 4,500 touchdown worked just on a simple trend line. And here we are now, stabilizing. Where are we on gold now?
Let's have a look. I'm gonna I think we're at 49.33.
Right, 49.33. There
only
we are.
Down $28 now. I mean,
right.
The low,
nice and steady. If you remember back in December when we were talking, I said I think we're going to get to a point where the gold silver ratio is going to flip, but it's going to take a few weeks. Well, here we are. We flipped, and what I think is the most salient point, the most important point, as I'm sure you remember from Jim's famous aphorism, thou shalt not chase strength in precious metals. So, if you did any of the hallmarks by saying you better buy now or you'll never be able to buy, if you said this is it, that's always a huge marker. And if you looked at the lines around the block on the Yarawat Road in Thailand, and especially in Singapore and Hong Kong, that should have been indicators to be careful. Of course, it's so much easier to run with the mob. And unfortunately, in the arena of picking entry points, or even more importantly in trading, you have to do the opposite of what the crowd is doing. The crowd is always wrong. And that's the number one commentary from Jim, from people like Mark Faber, who's been in the game for ages. Lots and lots of, good, solid pros out there. Number one rule, never pay attention to the crowd. Think for yourself, think independently. Don't get caught up in the hysteria and the emotions. So the real question, as far as I'm concerned now, is now that we're off like 30%. If you want to bring up the array, if you could, that shows where we were about 20 minutes ago.
Oh, is
Let's
that
get some.
with the prices?
Yeah, exactly. Let's get some perspective on this thing, so
Yeah,
that
let me.
people can.
Yeah, I know. I always like to look at the long-term picture as well.
Exactly. So let's look at the year on years. 144 on silver, 72 on gold. Come
Yeah.
on.
And
This is
even year to date, it's doing quite well already.
right. Exactly. And if you look at platinum too, again, some solid action there over a year. So my question to everybody today, looking at this and seeing where we are on those weeklies, on silver down, was it 32.12? My question is, are you buying here? Are you buying here after you've lost 32% in a week? That's the real question. Not did you chase it as we cruise through 115? That's the mistake. So that's what you have to take from it. Obviously, anybody who's one of the screen jockeys that's playing on short-term momentum and tried to buy silver on margin, like I've always said, you need to go to a mental hospital if you try and buy silver on margin, and now you see why.
Yeah.
You've got a very placid gold market, just nice and calm, just under 5,000. Just under 5,000.
Well, and as we speak here, the low overnight in silver is 73.50, and now we're almost at 81. So it's moving like crazy.
There you go. Yeah, a lot of volatility.
Yeah.
Yeah.
And
I personally, I have no concerns about silver whatsoever long term, even short term, medium term. If we saw a real serious weekly closing under 60, I might reevaluate. That's when I would start reevaluation. But this is just noise. This is noise, and this is silver. This is silver. Now you know what you're getting into.
Jim said that silver was gold on steroids, wasn't it?
Yeah, exactly.
Like yeah,
exactly. Yeah. And now you see why.
Yeah.
But the bigger picture, have we seen confidence restored in any way? No, we have not. We've got the Iranian situation, which just looks like it's building and building and building. It might be on hold for a week or two. Something very large is brewing there. We've got chaos across America in Minneapolis. We saw yesterday, New York City cops were arresting ICE officials or detaining them. So, I mean, this is not a vote of confidence. We've got a mess everywhere around the world. None of the things that got us up here have changed. It's still the same situation, and that situation is chaos. And we are still in a chaotic world that is growing more chaotic by the day. And there's no change out there as far as I can see.
I want to show you a chart.
Okay.
You didn't send this one to me. I got it. It's the volatility of the gold price in Reichsmarks.
All right. Yes.
So
that'll give you some perspective.
Yeah. So I mean, a lot of people probably got shaken out of their gold in the early 20s.
Yes.
But the direction of travel was for the currency to drop a lot more. And I think you were talking about Warsh as well. You made a comment that they're using this new appointment for Fed chairman as an excuse to say that he's going to be tough. He's going to be the next Paul Volcker. But I can't see him shrinking the balance sheet. It would bring everything down.
No, I can't see it either. I think this concept of an independent Fed is very limited. Very limited. He's going to be under Trump's thumb, and we know what Trump wants. And we know the work he's got cut out for him. Trump wants a lower dollar. This is going to be the battle of the century, because I don't see where he's going to get it from.
Yeah, and why would
we're coming right back off on the yen. We use the yen as the bellwether for how well Mr. Trump's policy of, weakening the dollar is going to be. And so far, it doesn't seem to show very much.
Yeah, I
You
mean,
know
the
what? Go
dollar
ahead, please.
yen is around 157. It seems to be pretty, not doing much at the moment on the monthly basis, but yeah, it looked like the dollar topped around 160. So we could see you think the dollar is going to weaken further versus the yen? Is that what you mean?
No, I don't.
Oh,
I
okay.
don't.
You
Just the
think it's
opposite.
well,
I think the yen is absolutely toast. And I don't think any kind of machinations by the Federal
oh,
Reserve are going to change that. This is
okay.
the theory that we're getting into the stage now where you're going to see precious metals and the dollar move up together. There's nowhere else to go.
Yeah,
There's nowhere else to go. I mean, you can't have the entire world putting all of their reserves into gold. They can't go where they should go, which is the yuan. They
yeah,
should be moving into the Chinese yuan, but the Chinese don't want that yet. They
yeah.
don't. They don't
Even
want.
though, yeah. And I mean, if you look back to 19, not 19, 2008, the dollar bottomed at 70.69, roughly dollar,
Right.
and gold was at 1,000. And now we're
Right.
at 5,000 basically, and dollar index is around 100. So, like you said,
Right.
the dollar and gold can go up together, but
It just
gold
has,
will
like you
go,
said.
yeah, and gold will go up a lot faster versus the dollar than the dollar.
Absolutely.
Yeah.
Absolutely. So I don't know. We still have the same problems. The continuation of the sanctions regimes, which are doing nothing. The weaponization of the SWIFT system, which is causing people to kind of manically look for other places to put reserves. We used to live in a world where we could people could put reserves, governments could put reserves in the yen, in the sterling, in the D-mark, now known as a
Euro.
bad version of the euro, and all of those are gone. All of those are gone. No central banker worth their salt. I mean, just on a trade basis, you'd be nuts to hold major reserves in the yen, in the euro, in sterling. It's not going to happen. So you're going to be forced back into the dollar. But like you said, and the past 5 years has shown this, 10 years has shown it, you can have that going up along with gold. What we're seeing is that the real movement is coming up in the central bank world of people moving towards gold, especially outside of the G7 arena, because they also don't have a choice. So you can see these kind of chaotic pockets of people trying to move around, trying to come up with things. And of course, one thing you're seeing on the back of that is a very, very new, movement to hard assets, trying to find a neutral reserve. It's not really working out as planned. And so people are doing the next best thing. And this is worth remembering too, that this is not just a gold and silver game. We're seeing the whole metals market, the whole spectrum move up as people start scrambling for anything tangible that could be related to long-term industrial development and national security. So that's why we've got cobalt up. That's why we're going to start to see, a lot of the other metals, platinum up, palladium's up, over about 100%, I believe, year on year. And, for me, the next big one's going to be nickel. But I did want to say one thing about the gold chart that we looked at when we started here. I said back about a week ago that we were going to come back into the channel, and we are in the channel, and that channel now is got to be what we look at and what we really pay attention to, and that channel is holding. And if you look at the up down on it, it worked perfectly. We have a channel there. That channel, the slope of that line equates to, I don't know, I'm just eyeballing it, roughly, over a year, it would be equivalent to $2,000 in gold. So if we're in that channel, and we are, and that's a snapshot of this morning, if we're in that channel, we're fine in my book. We're just moving up. All the
Yeah.
rest is noise.
Yeah, I guess it got ahead of itself here a little bit.
Exactly.
And then, I mean, yeah, so now the resistance seems to be, I think the high yesterday was just below 5,100.
Right. So you could see with that last bar on this weekly,
Yeah.
We've tested the high and the low of the channel in
Yeah.
one within the week. There we
Yeah.
are, there and there.
Yeah.
It's really not rocket science. If you want to panic about what's happening with gold, wait till we lose the channel and then re-examine it. As long
Yeah.
as we're in that channel, we're fine. We're moving up and moving, quite honestly, moving up strongly. As a matter of fact, I would expect that channel eventually to give away, but I can't see anything that would indicate that this is the end of the bull market. As a matter of fact, gold's performance in the past week through all the chaos has been nothing short of stellar. We are here at 5 grand and we are not budging. Gold is not moving. So, we look at where we were 2 years ago. Let's everybody get some perspective. Let's get some perspective on this thing. I mean, we were talking sub 2000, and now we're up here at fives and holding nicely and firmly. I don't see why anybody's panicking. What we just witnessed was the usual silver games. It's games in silver. That's
Yeah.
where the game players hide out.
I wanted to bring this up here. Hold on. It's the yeah, because have you heard of course of Pierre Lassonde?
Sure, of course.
Because
Yeah, Franco Nevada,
he
great
very
man.
yeah, very successful, like,
Very.
right, and he's always said, and I listened to him in Zurich a few years ago. He made a speech. He always said that he's looking for a Dow Gold ratio 1 to 1. And that's why, like you said, I think we're nowhere near the end of this bull market. And
No.
actually, we've tested the 10 level, which isn't really that important, but it's just like a round figure.
Right. Exactly.
This trend line here is broken. And interestingly as well, there was where was it was in the other one in the S&P gold ratio. There was a really key support from 1929 that we broke. But yeah, to me, when this goes near 1 to 1, it will mean that all the rebalancing from paper assets to hard assets has been completed, and then we can have another huge credit cycle. But
That's probably true.
yeah,
I don't know, but it's going to have a very different flavor to it this time because it's not going to include the rebuilding of Europe. It's not going to include the EU, and a lot of the peripheral countries are not going to be participating. I would just say, no matter what anybody thinks, we are still witnessing the gradual movement of the financial center of the world, although it has not happened and it's going to take a lot more time, like another decade. We're moving to China. Hong
west
Kong's got a record number of
west
IPOs.
yeah, west
What?
to east, and I think Hong Kong. I've been told by Eric Young, who I've interviewed, and he lives there, King Kong. He says that they still follow the English common law in Hong
Yes,
Kong.
they do. Yeah.
So it's going to act as an avenue for the mainland Chinese to probably. I think there was a publication this past weekend in this Communist Party paper that Xi Jinping wants the yuan to become a major reserve currency, but like you
Yes.
said, it's still not there. And even Jim Rogers, he moved to Asia and taught his children Chinese because he thinks that's where the financial power will shift to. I guess it went from London to New York, and now it's going to go from New York to like Shanghai, I guess.
Shanghai via Hong Kong, something
Yeah,
like that.
Hong Kong, yeah.
Hong Kong's property market is turning around. Like I said, they last week they just put out a record number of IPOs. There's a lot of action going on there. Now, the place obviously is suffering a crippling deflation. So they're going to have to do something about inflating the economy and stimulating demand. But that's not Hong Kong. And right now, you can see the plan is to gradually let Hong Kong open up into the Shenzhen province and move it out and move it out and move it out slowly, and to create this greater Bay Area structure. But what I wanted to say about silver, and I want people to remember this because I know we got a lot of silver stackers who are out there. I know a lot of people don't like to trade, and that's fair enough. Everybody has to do their own thing. Let's not argue about it all day long, right? But you've seen that a lot of people who are involved in silver, some of them, when the market went up, they tried to get out of the market with physical. And they found out that the US system, if you're not in New York, or Washington, D.C., or maybe San Francisco, wasn't letting them out. If you go to these small coin shops that have no money, they're going to say, if I hand you over $10,000, I have to be able to short a future and ride that differential until the refiners, which are 3 to 6 months backlog, come and give it out. So you've just witnessed the fact that, if you want to trade out, you might have difficulty. So you better start to have a plan on what you're going to do. For people who say, why would you want to trade out into fiat, right? Fair enough point in the long term, but in the short term, you can see why you would, simply to buy back 40% lower, which is why you would.
And
But
also, we never know. Some people, have had the silver for a long time and they might need to spend it on something they always wanted or pay off debt.
or
So,
medical emergency,
yeah,
something, your car gets totaled. So
yeah,
remember, if you ever need to sell part of your stack, please set yourself up a plan now how you're going to do it. And in that, I would like to say, remember, throughout this entire period of silver screaming north, Dubai and Singapore were always buying spot
mm,
throughout the whole thing. And the reason is obvious. When you go to the Dubai souk and you walk around and you see some of the gold stores there, of which there are hundreds, right in the gold shop itself, you can see necklaces and brocades that are worth $50,000 to $100,000 each, dozens and dozens of them. There's $10 to $20 million worth of gold in that store. And they have banking facilities, so they can hand over the cash and let you do and give it to you in a time of extreme volatility. The same thing in Thailand. You go to Hua Sing Heng on Yarawat Road or one of their many other divisions, they're handing over cash for gold in bricks of Thai baht. And
yeah,
for anybody who thinks that Thai baht's a garbage currency, I suggest you look at a chart. It's
yeah.
been one of the strongest currencies the past 2 years.
I mean, here in the UK, yeah, there's not too many local coin shops anymore, and they're usually like collectors, numismatics, and metals,
Exactly.
and you might be able to deal with them. But if you go with 1,000 ounces of silver, and it's at $100,000
Right.
amount, they're going to have a tough time. But there are a lot of online dealers, bullion dealers, who will. You can even look online, and they're bidding for the silver, and they will buy it, and they have the cash. So in the US, I think there's a lot more local coin shops, and I interviewed a guy from Money Metals Exchange, who's a big
Right.
online dealer in the US,
Sure.
Stefan Gleason, and he basically said the problem in the US is that they don't have enough refineries. So the refineries are not giving the local coin shops lines of credit. So they're not. But one good thing about what's going on is that if you're looking to buy to get into stacking, you go to the local coin shop. They will probably let you have it below spot because they want to get rid of it because they can't send it to the refiners.
Well, that's true too. Yes. Good
Yeah.
point. Good point. Well, I'm just saying for people who are in that game, just remember we witnessed a liquidity problem in a lot of parts of the United States. You can see these
Yeah.
people just do not have the financial muscle that you have sitting around in Dubai and Singapore.
No.
You just say you want to sell that and you want 50,000 in cash. There it is. There's your 50K. Next.
Yeah. The other thing, I've been speaking to a friend who worked in the US Treasury market for decades, and he's retired, but he looks at the market and he says it's kind of frozen, the Treasury market, and he thinks that's really a bad sign of there's not much liquidity anywhere.
Uh-oh.
Yeah.
That's a problem.
Yeah, that's a problem. So, yeah. Anyway, as we speak here, it's like quarter to 9 a.m. London. So silver is back above 80. It's at 80.40, still down 7, but we could be at 92
by
later
the
on
end of the
today.
day.
Yeah,
Right.
and gold is holding on steady, 49.20. I mean, like you said, perspective, we started the year at 4,300, so still up 600, and silver started the year at 71. And yeah, with that, Peter, any final thoughts for the viewers, or have you said what you wanted to already?
Yeah, more or less. Just stay with what you stay with the lesson that's been learned over the past 2 weeks. Silver can get crazy. We're still in a situation where nothing fundamentally has changed. Quite the opposite, actually. The long-term underpinnings of the gold bull market are still being built. The critical mineral structure, the need for silver going into AI data center applications hasn't gone away. These are the big things that are going to get us through the next 10 years. And keep your perspective.
Yeah, I would also add, I don't want to get too political, but it seems to me in the West, uh, not a huge amount of people or a proportion of that population, they're starting to lose a lot of faith and confidence in the leaders, political, financial, like academic leaders, especially with this list that's come out. And I think that's always bullish metals because fiat currency is issued by these people.
Yes, it is. It is. And again, it's a barometer of confidence, and that's what you have to remember.
Yeah.
When I sat down and did this book with Jim so many years ago, one of the things that we said is, the central tenet of how you look at gold and how you balance it within the mindset of your portfolio is you have to be able to remember that gold acts as a barometer of confidence for the major, for the political security and existential security that people have. And that, oh, there we are. And, what we used to talk about when we were writing this together was, how can we hammer down the big ideas and then bring them into a smaller perspective that will impact the individual. And so, even right there on the beginning of the book, when you see there is, there's no way to save a currency system like the one we're in, whether you like it or not, whether you think it can hang on for another 2 years or 10 years, we will get to this point eventually where it will have to be reset. There is no other way that you can avoid it. And gold and silver are still acting as barometers of confidence. You've seen the wobbly thrown in on silver, both by people playing with the market, because that's where silver people hang out, people who do that. But at the same time, you're seeing a real step shift going on in the entire metals market outside of gold, too. Gold, which is far more monetary, purely monetary to a lot of people, it is. It's got very limited industrial. But in the industrial zone, as the world divides into two camps, which it's doing every single day, more and more and more, people realize the world economy is, as a globalist entity, is not coming back. You better grab what you need now and hunker down for a decade and get ready for the fact that you're going to need to have stockpiles of critical minerals, metals like silver, like platinum, palladium, cobalt, nickel, which hasn't moved yet. That's what I'm looking for now. And you better hunker down with as much of this as you can get. So 12 billion by the Trump administration to build that up. Yeah, it's a start. You're going to need more, though.
Oh yeah, and don't just let the sovereign governments do it. Do it yourself as well, I'd say.
Exactly.
Yeah,
Exactly.
and yeah, A Pocketbook of Gold. I've spoken a lot about that book. I have it here. It's like a limited edition. It's difficult to find, but now Peter has put it in PDF form, and there's a link below in the description. If you, I really couldn't recommend it, enough, and it's only $25. I think that's a bargain. So Peter, thank you again, and we'll keep in touch.
All right.